What's up guys, Philip at Trade Genius. In this video I wanted to show you kind of how the upcoming Bitcoin halving is going to play an effect on the Bitcoin price and why you should be really paying attention to that right about now. Alright, so let's dive into this video.
Trade Genius.
Alright, so guys, this is a Bitcoin difficulty chart, and so what I wanted to point to you was this period here. And I know it might be a little hard to see, but you actually see a decrease in the Bitcoin difficulty. And if you're not familiar with what the Bitcoin difficulty is, it's simply a way to throttle the economy so that a block is solved every 10 minutes. And so that way, if there's more mining hash power that comes on the network, the difficulty increases, meaning that it's harder to solve the cryptographic problem to then verify that a block is proven and then time-stamped, all right? So what will happen in times of near bottoms on Bitcoin is you'll start to see a decrease in the amount of hash power on the network. So how much power is being used to solve these cryptographic problems to get your reward for solving the blocks as a miner. Now, back in January, right around January 2015, we saw some reductions in the hash power. So now, if you look over at the January 2015 time frame, what you'll notice is that's when that bottom was put in of that larger run up to the end of 2013, and which structure we've been kind of holding to as far as the price structure and how we've corrected. The time frame thus far is a little shorter. We were tracking a 4 times compression, but that sense has deviated. So now we're treading in waters that are basically price discovery, trying to find a bottom here. But key thing is that we're starting to see that reduction in the hash rate. So now this is currently what and this is just in percentage terms, so a little bit easier to see. You notice we're starting to see the percentages change here to red, right? So that's a drop in the mining hash power. The reason for that is simply economics, excuse me. It's more expensive to mine, or actually it's not as profitable to mine, excuse me, because the price of Bitcoin has dropped. At some point, miners have a break-even price. People throw numbers out there, but it's really a dynamic number. It really depends on how much they're paying for electricity, other overhead costs, things of that nature. So it's hard to really pinpoint exactly what a break-even cost is. Some people have thrown out the low 3,000s, and maybe that's a decent average, but that will actually come down. So it becomes a chess game, because if people start pulling their miners offline, the guys that are able to still keep going can actually take advantage when the difficulty drops. So we just had a big drop of 15%. That's rare that you see one that large as a reduction. Prior to this, you saw one briefly in October of 2018, and then prior to that was July 2018. We had a small reduction, but other than that, guys, the previous one to that was November 24th, 2017. So it doesn't happen very often, but when you get a series of them like you see here, a cluster, that's the stuff that will oftentimes accompany a low. Now, the other thing I would show you guys is the, and visually you can see it here, but these lines here represent the halving, right? So November 2012, we had a halving. Notice that we bottomed here. So the bottom was roughly about November at about a year before that. Okay, bottom here, and in January 2015, about a year and a half later, the halving event took place. And then we have another halving. Right now we're on pace for May 2020. And so again, we're in that zone where we would see previously a bottom and start accumulating. Because what's going to happen, guys, in those halvings is that there's going to be half as much Bitcoin being produced, right? So it's a supply and demand thing. And as you can see, a lot of times what happens, the market turns up ahead of that. And then when it does happen, you just get some really spectacular growth after that. So just pointing that out, guys. Another way you can look at it is this. This chart here, you'll see basically here we are in green, and we're a little over 500 days out. The last time the second halving is in red, right between about 550 days out, the bottom was in and it went up. Prior to that, the first halving actually made a bottom around 600 days out and then went up to big spike, pulled back again around 400 days, and then went up. So as you can see, this area here, 550 to 400 days out, that's a sweet spot. So we're there, guys, as far as that goes. And historically speaking, if you're not exactly pegging the bottom, but you're getting close to it, those are decent levels to be looking. And this is like a long-term ad, right? People have been clamoring for these prices. So anyway, I thought I would point that out to you guys. Again, market structure looks very similar. So if you guys are interested in getting into the room and joining us and pinpointing these levels that we look at for long-term entries, head over to Trade Like a Genius and check out our options there. Package number 1 will get you in the room with us and all of these signals, including ETF and binary options. So check that out. All right, guys, thanks for watching. Please hit like and subscribe. Appreciate you guys watching our videos. I'll see you on the next one. Take care. Bye.
Trade Genius.